Good evening, folks. It's Pinpoints Patterns here in the UK. It's just coming up to 8:45 in the evening here. I'm just having a scan through the markets. Somebody sent me an email last week asking, do you use indicators with your chart pattern recognition? I don't use them very often, but there is one indicator, and I learnt about this indicator off one of Larry's radio show guests, on his TFNN show, a trader called Hema Reddy, and Hema came on his show, and she uses the relative strength index, the RSI 14. So I've put this RSI 14 on here. She uses it in a slightly different way to what other traders use it. But when she showed how to use it, I thought it could be useful when you're doing the chart patterns. And you can see I use it for divergence, and I think I've done videos on divergence before. But if we look, we'll start with the pound CAD, and you can see it's been coming down a sharp move down, been coming up from 1 to 177. It's now dropped 9 cents or so, 8-9 cents. Okay. And what the RSI does, it follows price most of the time. So when price makes a new low, the indicator makes a new low, and so on. And you can see what we're happening here. The indicator's made a new low, price made a new low, the indicator made a new low. We've rallied back. Now prices come down quite sharply, but notice the indicator now is making a higher low. If you scroll onto the value, in fact, if we just blow this up a little bit so we can take a look at it, you'll see that the indicator on this low, if you look over on the left there, over on the left, it will tell you what the indicator is reading on that particular candle, 28.21. If we look back over here when it was making a higher low, it was reading 24.93. Sorry, over here, 24. So the actual indicator is reading higher with price lower than it was reading over here, if that makes sense. So we've got this, what we call divergence. Price has made a lower low, but the indicator has made an higher low. Now that puts you on standby. So what you do then is you look at your chart and you're looking for a pattern. Are we seeing any patterns completing here? Are we seeing any key ratios in Fibonacci? So what you do is you look for your key ratios and look for any patterns. And there's your ratio, and you can see we're coming up very close to the 786, aren't we? Very close to the 786. We need to keep an eye on that. And we've sort of, it's more or less come straight down, hasn't there? There's 382 there. I suppose you could argue there's almost a 3 drives. It's not very clear 3 drives, but there could be one there. Don't know if it'll draw it in or not. No, not really. It's not drawing it in very well, is it? So with this example, I'm not really seeing a clear pattern. There is an ABCD structure, but I don't know how that would work. There's your AB leg, and that's the 1.2. It's taking you 1.27. Now it's not a very convincing, is that? But your 1.414 and your 786 might be very close. So I'll just right click on that and put the 1.414 in very quickly. That's got to be close. Very close, isn't it? So that is your 1.414 expansion. So there is a chance here, and of course it's way oversold. It's been down for how many days in a row? I don't know, is that tonight's open or Friday? That's Friday's close, isn't it? Yeah, it's Friday's close. So we've been down 4 days in a row. Now we've got an inside candle. I'd probably come down to a lower time frame and trade this, something like a 15-minute chart, and see if you can find a low risk entry. If you're going to do that, but be aware that it could drop to the 786 as well. So yeah, you can. Again, you've got divergence here on the Australian dollar. Notice how the price is making a lower low, but the indicator's making a higher low. So you've divergence there on your RSI, and a little bit on the New Zealanders. New Zealanders looks like it's already bounced a little bit off the low. We did look at this last week. Thought it might hold the the big round number at 2, and it did break down because there were a nice little contracting reverse wave there, and they completed the ABCD to the downside, but it broke down. But it hasn't really broken down, has it? It's sort of made a new low, but then it's bounced back. So worth keeping an eye on. You've got the divergence there as well. So those three are worth keeping an eye on. The one I wanted to focus on was the Euro pound. Looks stretched as well, doesn't it? That's what we call an equal drive move, like a flag. So you've got your flagpole, and then the move, that's just about finished. And we're at the top of the range on the longer term. So when you get above 90, it's usually at the top of the recent range. There's a 3.5 year range on the Euro pound. So keep a close eye on that. That could fall off the page next week. Little 135 pattern here on the cable on pound dollar. It's not got the time symmetry, I don't think. We have to blow it up and have a look at it. Have we got any time symmetry there? What I'm going to do, I'm going to take it from the Friday's low, Thursday's low, and go backwards with it. So I'll take it from there and go backwards with it and see if we've got any time symmetry. It's just a few candles out, isn't it? But about on a daily chart, it won't be far off that. I'd have to look at that. Put some ratios in and have a look at it. There you are, 618 and 786. You've just not got your time symmetry between the lows, but you've got the ratios there. So, and again, straight down, seven bars in a row down. This is what we call a bullish harami. So we could get another leg higher on that. So I'll keep an eye on pound next week. We could rally for a few days next week in British pound, is what I'm seeing. So yes, you can use indicators with chart patterns if you want to. You don't need to. The patterns are your indicator, but this is it's just an handy little tool. Just gives you a little bit of extra. Let's look at an example. This is the pound yen, and you can see we're coming down at an ABCD formation. Let's have a look what ratios we've got coming in. We've taken out your 50% off the swing lows. Suggests it might not be retracing off that low. It might be retracing off another one. Might be retracing off this one, for instance. If it is, it means it's going higher. And you've got your 786 coming in off that. So, and what am I seeing here? Well, there's 3 drives to a bottom from there. I'll put that in. There's a drive 1, drive 2, drive 3. I'm going to put indicator on in a minute. Let's see if there's any divergence. I'm cheating really because I know that there is. There's your 3 drives to a bottom. So there's a pattern there. I like to see more ratios present, but there is a pattern there. And if we come in again, there's another 3 drive there, I think. Drive 1, drive 2, drive 3, and there's an ABCD pattern there from this high here. A, B, C, D. That's just extended a little bit. If you notice, this green candle is a Monday morning, the first candle. And notice it gapped down. It closed there on the Friday at 10 o'clock. Then it gapped down on the Monday, right? And it came back up and closed above Friday's close. That's bullish. So let's have a look if we've got any divergence on the indicator. I'll put the relative strength. It's just an ordinary relative strength, 14 periods. Let's jack it out a little bit. Oh, yes, we have, haven't we? Look at this. There's your low, your RSI. The low on your RSI there, 21.8. Okay. And then we came lower in price, and your RSI is reading 30. So that's telling you you've got the bullish divergence. You've got your 3 drives. You've got your A, B, C, D. I'd just like to have seen a few closer to the ratios, but that is a valid setup. It's what it put you. That means you put it on your watch list. Now, when you see this candle, this bullish candle, straight away you know what your risk is, because you can buy the close of this candle. Well, actually, that closed them in 2 o'clock in the morning. So if you're in the UK, you're probably awake at that time. So you'd wait for your 6 o'clock candle. But that your risk is the low on here, isn't it? If it drops back down below here, then it's wrong. So that's basically the way you'd enter it. So that low there, you 129.28, your lower bit 129.25, and that's it. Okay, so you ain't got to risk very much on this. It's at 129. So see what it is at 6 o'clock. So what I'm going to do, I'm going to refresh this and see what happened. See if we can refresh for one with this 15. Refresh for a month. See what it does. Oh, look at that! It was the lows. There's your 6 o'clock candle. Look, it were a doji bar. But you could have entered on that. If you wanted to be really conservative, you could have waited till it broke the high of this candle. The high of that candle was 129.76. You could probably plus your spread, plus 5. 129.86, you're in. Your stop loss is 129.25. It's still a decent risk to reward, isn't it? You're only risking 60 odd points on that, and off she's gone. So that, yes, you can use your divergence and wait for your price to confirm that it might be going to reverse. And that was a gap down open reversal, and that was it, and off she went. So that's just an idea how you can use the indicators with the chart patterns, but don't just use the indicator on their own. Just make sure you've got a pattern completing as well. So hope this helps, folks. Take care, have a good trading week, and speak to you again soon. Bye for now.